All righty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session. Let me go ahead and just put this in here so everybody knows. I got to. It's like I feel like I still have to remind people that the Morning Edge is happening just because we have new traders in our community. So hold on one second. So let me can you guys hear me okay? Test. Can you guys hear me all right? Testing, test 1, 2. Gavin said all good. Okay, so well, as one person hears me. Hey, Alex. All right, so when Steve gets here, you guys do me a favor. So when Steve gets here, ask him, what the hell are you doing here while you're on vacation? Just do me a favor. When you see him, ask him that, okay? He just literally hiked up a hill to go get into an area where he could be with you guys. So when he's here, because he's probably getting set up right now, but when he's here, ask him what the hell he's doing here and tell him to go enjoy vacation, please. All right. Again, that's just me asking. He's not here yet, so I'm asking you guys for a favor. Alex said that's love and commitment to the community. Yeah, but you know what? He shouldn't do that. He should really enjoy himself, right? Like, just disengage. That's the thing about holidays. When you're on holiday, I like you're not going to hear from me. I mean, I sometimes I'll pop in if I have a moment where, you know, everybody's asleep and I'm awake because I get up at odd hours. I'll pop in and say hello, but you know, for the most part, I'm disengaging, and you need that for your sanity, in my opinion. Anyway, okay, that's neither here nor there. I'm gonna get to the chart. So let's talk about the markets and where we're at right now. So the euro up against pretty key resistance. I think we could. It looks like we can actually extend a little bit here. Look for 117.50. 117.53 is a 618. Matter of fact, let's do this really quick, and then I'm gonna delete it because I don't want it to mess up everything I'm looking at here. You know, the 38% retracement from this recent high also comes in at what is that? Oh, here we go. 117.55. So I'm gonna say 117. Oh, hold on. First of all, yeah, 117.55. That should be pretty good resistance. Let's just go with that. And by the way, this is exact opposite of the dollar index, right? Like if you look at this, okay. If you're not short the euro, I'm short euro yen. I'm not short euro dollars yet. Okay. But if you want to be short euro dollars, I think right there is a place to do it. 117.50. That is what I think. Support on dips is going to be, you know, probably back down here. Well, it is going to be back down there. It's going to be right here. So dips on support will be back at let's just call it 117. Move my microphone. Sorry, guys. Okay. I am going to keep this on bearish. Cable. So sterling very similar to the euro in a sense that, you know, we're probably going to find resistance right here at 137.20. I'm a little less bearish the sterling just because of, you know, we've made a higher low now. So I'm going to keep it in range, but I do think we're going to be supported on dips back to 136. Well, spike low here is 136.30. I mean, I'm just going to write down 136, but I'm going to keep us in range. Obviously, you know, the Aussie's still bearish, and we have a lot of unfinished business to do in the Aussie still. Okay. Bear flag pattern still points to 70.70. We got really close on Friday, but when you get to these, like, let's stop for a second and talk about the Aussie. In my opinion, it's 50-50 now to whether we reach for 70 cents or, you know, the 70.60 and complete this, or this was close enough. A lot of times we get to a level where it's like, okay, that was close enough. But you guys know I'm very, very bullish on a move down to 70 cents. I really, really want to be long the Aussie for a tactical bounce. It's going to be one of those. This is the way I envision it working in my head. We get down to 70 cents or really close to 70 cents. I'm going to get long. And then when I get long, I'm going to put in I'm going to, you know, try to, you know, take partial profits if I can get it. And then the rest, I'm going to move my stops to break even and just hope something crazy happens, you know. But when I say crazy, you know, what would be an example? What would be an example of something crazy? What could you guys think of? I got an idea what could be something crazy. I'm just gonna I'll throw it out there after I'm done with some of these majors. What do you guys think? Let's say you get long Aussies and then something crazy happens. What would be something crazy? By the way, what I'm about ready to say is I don't want to like sound like a jerk either. $72.40. Okay, 72.40 is resistance. Yeah, it seemed just like yesterday we were at 74 cents. Huh. Let's see, dips down to 71. Well, I'm going to write down just 71.05 for now. You know, it would be something crazy. This, and again, I do not want to sound like a jerk. I don't want to sound like, you know, oh my God, Blake, I can't believe you just said that. Imagine like that Chinese bridge gives out, right? And it like, you know what I mean? Do you imagine the amount of commodities that would be needed to rebuild in China after that? A disaster like that happening? Something crazy like that could happen at any time. Yeah, the dam. I'm sorry, not the bridge. You're right, Simon. Sorry, it's 6 o'clock in the morning on a Monday here, and I'm still like the dam. Yeah, that would be crazy. That would not be cool. It would obviously be horrible. It would be a tragedy, but something like that. I mean, you know, you imagine if that dam broke, the Aussie would go from 71 cents probably to 85 cents within 2 days. Yeah, that would be crazy. So anyway, I mean, obviously I don't want that to happen. I'm just saying if I bought the Aussie, you know, that would be like something that would just, you know, it would send commodity prices like through the freaking roof. 68.80 is resistance. You guys should have got that analysis via ForexAnalytix already. 68 cents is going to be support. Now, remember, let's not forget, this is major support, right? These, and actually, let's go to the daily chart here. Big breakout point, big breakout point, big breakout point. So, I mean, that's how big this 68 cent level is. So And we're bearish while we're below, let's just call it 69 cents, but 68.80 is resistance today. And we can thank the RBNZ for that one. Dollar Canadian. If you guys read the analysis this morning, I am expecting dips back down here to find buyers. So one resistance right here. That's previous support. 618 comes in at 126.20. Then we have 126.80. So I'm going to write down both those numbers. 126.20, 126.80. And you know what's interesting is I still don't see Steve, so I don't know if he's going to be able to make it today. He called me. He said he's going to make it, but I don't know. Let's hope he doesn't. Resistance. Now, after being a little oversold here, I would think that so let's think about this for a second, right? Previous breakout point. You can see how we stalled around there. So any rally back up to 128 should find sellers. You know, I don't know where the bottom of this pullback is, but I'm assuming that any move back up towards 128 is going to find sellers now. So I still think it's bullish. Dollar Swiss, same as last week. Remember, 91, 92, nothing to do here. Not anything to do. Dollar index still pulling back a little bit. We're going to be finding support pretty soon. So, in my opinion, 91, 92. We're in a range. Dollar yen. Oh no, I'm making my way lower. I'm sorry. US dollar, Norwegian krona. This is a lot of support down here. The 50% retracement, we could make it down to 890. You know, if you remember the analysis, or if you read the analysis this morning, this 618 may offer some support. I'm already starting to buy the dollar Norway down here. Well, let's go 890 and resistance. Now that you guys know, this is major resistance here. I don't think we're making it anywhere up there today, but I will write it down. As you guys might remember, I'm looking for a wedge to form. So dollar MEX, very well supported. Now also keep in mind that we're above the 200-day moving average. Okay. Hold on really quick. Oh, it looks like Steve just came in. So 2025 is previous resistance. Or previous resistance, which should act as current support. And resistance up here is 2045. Remember, we're above the 200-day moving average. So now this becomes bullish. Okay. Hold on really quick. I am going to take partial profits in the euro yen. So just stand by. So, by the way, for the euro yen, if you guys didn't catch it, I was selling the euro yen at the 618 here. I sold at 129.06. I took some of it off I want to be short overall the euro yen because it's in this channel, but I just wanted to take some of it off. Okay, for those of you that are in the chat rooms, or maybe if you're not in the chat rooms, so just letting you know. Okay. Raj says, are you going to punish Steve for being late? Time out for being tardy? Absolutely. Steve. I know he's here. I see him logged in now. Continuing on with analysis. Dollar yen. So dollar yen, this wedge here or this triangle might end up, maybe that high held.
Hey, you were calling for me.
I was. I'm getting the entire. Everybody who's logged in knows that you should not be here right now, and we appreciate that the fact that you are here, but you really should be enjoying yourself on holiday.
Nah, it's okay. Hey, trust me, I'll have the rest of the day to enjoy myself because it's really nice here.
I bet it is. I don't even know what you're doing here.
I should actually show you the view from here.
You can if you want to. Okay, so wait, real quick, or just show us before when I'm done here. So 618 retracement held in the dollar yen, and so we're going to mark that up as pretty good resistance. That's going to be basically 110.20. We talked about that last week, right? We're like, oh, 110, then we're like, oh, 110.20 because that's a 618 retracement. So that's holding. Support is going to be down here at, let's call it 109.35. Dollar index pullback. We're almost at the night. This is the 50% retracement. To give it all the way down to the 618, down to 92.93. But I think we might find support here. So let's go 93.10, 92.90, 93.10. And I'm going to keep us in range for right now, but we'll have to see where we close by the end of the day. Because it's the dollar looks good against some currencies and it's obviously pulling back against others. So resistance on rallies should be right back up towards this breakout point, which will be right here. Let's see. Here's silver. As you guys know, 24 bucks is huge. And actually, I think we can right now. Well, actually, it's 24. It's still 24. Support. I know we've been writing last week down as 23 as support, and we overshot it by, what is that? Maybe 13 cents. So 23 has now become pretty significant. We have to stay bearish while we're below 24. You guys know that. Put an asterisk there. Gold. Gold is back above 1800. Now here's the tricky part. That's resistance. I'm not trading gold right now, and I don't want to be short based on the dollar position I'm taking. But if you want to sell gold, this is the place to do it. And I bet you that's an 88% retracement. Ooh, it's close. I'm gonna write down 1810, but I'm flipping it back to range now, being that we're back above 1800. We'll see if it changes going into next week, but 117.75 is support now. I said 117.75. I meant 17.75. Bitcoin. Bitcoin now completes the AB equals CD move. Can there be more? Yeah, but you got to be real careful because see what's happening. It's just holding now. That's just a risk that's developing. We're going to write down 53,000, but remember, A, B, C, D, it could stop here. 48,000 is holding as support, and that is the breakout point. So we're going to write that down, and it continues to be bullish. 48K, and we could rally towards basically 53K. But just be cognizant that that is an AB equals CD. S&P. Now, I thought we would stop around these levels. Do you remember last week I said, hey, you know, 44.50 should be some resistance? Well, we're above that right now. And there are some expiries this week that are around the 44.50 level, some pretty big ones. My guys that I used to trade with had mentioned that. So just be cognizant of it, right? Brand just said the 137 level in the sterling guy is we're above it. Yeah, resistance is 20 pips away from here. So in my opinion, resistance for the S&P though, this trend line will hold. So 40, we got to write down 44.85 and then 40. You guys remember this? Hold on. $44.98. Okay, so let's write down both of those. 44.85 and then 4,500. Obviously, we'd be bullish. We're bullish while we're above right here. 43.75. This 43.50, 43.75. Okay, still remains bullish. All right, there you go. I've got to actually do this today because Stelios is not here. Steve is here.
Oh yeah.
Hey, Steve.
Hey.
All right, buddy. So everybody all together now. Steve, go enjoy your vacation.
Let me see. Let me see if this works. Oh, it does. This laptop is amazing. It lets you connect your phone as a camera.
Oh, nice.
So let me see if the Bluetooth range is good enough.
Oh, it's beautiful.
Huh? You see?
That looks great. Wow.
There you go.
That is nice.
Yeah. So yes, I'm absolutely going for a swim after this.
Michael,
letting you know in advance.
Michael asked what island, but you're not on an island, are you?
No,
oh,
I'm
no,
not on
you
an
are.
island. No, I'm not on an island anymore. This is Parga, not Prague. Parga. It's exactly opposite from Kerkira. So it's like mainland Greece. But exactly opposite from the Ionian Islands. So it's still very beautiful. Let me switch to an actual camera from here. Okay, perfect.
That's amazing.
Yeah, it actually is. It's a very beautiful area. We've been here before in the past, and it was It's really nice. It's like you're on an island, actually. So it's, it's a place we wanted to revisit. So how have you been?
Good. Just I had some family over yesterday. We had our nephews and over celebrating my birthday and one of the other nephews' birthdays, and had our neighbors over. Now that all of our kids have had COVID, it's fine. Now they can all
True. Nothing to be afraid of anymore, right?
They can all hang out for the next 3 months. So
yeah,
it's all good.
very,
Anyway,
very true.
I'm gonna turn it over to you, and then I gotta go. Speaking of which, I gotta make my kids breakfast for school, and then I'll be back in the chat room. So I'll see you guys there, and Steve's gonna take you for now.
Perfect. Thank you, Blake.
All right, thanks, Steve, for being here. You didn't have to do that, but it's nice to have you back.
Nice to be back. Okay, let me see. Everybody can see my screen?
Yes.
Perfect. Let me put some things in order here. Question box and all that. And there we go. So here we are on the charts. So what has been happening today? What's been happening today is that we've had this dollar reversal lower as the S&P keeps pushing higher. That's not a surprise, of course, as the rest of the indices. So the question is, has dollar found a high here? You know how it is. It's, every day we can keep asking the same question about anything. So that's not really helpful, but I was monitoring this little ascending channel here. We did find resistance for the time being there. We do seem to be producing an evening star formation if the dollar index closes more or less where we are at the moment, or a little bit higher or a little bit lower. That's not going to change anything. We've had these RSI divergences, and we've definitely at the same time seen some of the dollar pairs rebounding from important areas. One example is the Aussie USD, right? The Aussie USD did have a little bit of an overthrow below this channel, but seems to be having a very healthy rebound today. We do, oops, give me a second, because this panel here is annoying. Let me increase a little bit the size of this. Perfect. So we've had the Aussie rebounding from that level. We've had the Euro rebounding from the bottom of this wedge, right? Now, how valid this wedge is, it's a big conversation to have. For the time being, this trend line support passes from several points, as you can see, starting from there, and it's been tested like 5-6 times already. So I wouldn't say it's irrelevant, right? RSI divergence as well. And if we do keep seeing this type of risk on move, by the way, within less than 2.5 trading days, because it was half of the trading day on Thursday, it was Friday, and it's like not even the beginning of the trading day today. We've already retraced from, let's see, the low was at 43.50 something, all the way up to 44.67. So another very strong rebound from the bottom of this ascending wedge, right? And why not at all-time highs by the end of the day, right? It's definitely not unlikely, not impossible, or by tomorrow, whatever. If you remember, I said on this webinar on Friday that most likely we're going to close positive on the day, and most likely we're going to be holding once again above this ascending wedge. So as long as that's the case, you need to keep respecting the upside. Also a very nice move from the VIX. I was monitoring this triangle in the VIX. We never managed to close above it on a daily closing basis. We did probe the area above it, both on Thursday and Friday, but we never managed to close above it. And now we are, some distance away from trendline resistance. We're actually now closer to the trendline support than we are at the trendline resistance. So VIX also, not giving us any really big bear signal. The indices themselves are doing very, very, very well. The Nasdaq, I know that it's not trading anymore in this wedge. It hasn't been for some time, but you can easily view this short-term move as a consolidation within a rectangle, right? So there we are. So here we are, consolidating within a rectangle, and we're currently testing resistance, right? So we are already at all-time highs having to do with the Nasdaq. Extremely likely we're going to break through it, in which case the natural target for that move would be an extension towards 15,700, right? So there you go. Keep in mind 15,600 is the 100% extension of these previous wedges maximum width. So 15,600 and 50,700 next upside targets. As you see also during the previous move, the daily RSI literally reset back to neutral, right? We even probed the area below 50. We went all the way to 46. So who knows? We might be about to produce another move to the upside from here. Yeah, I know it doesn't make much sense. I know that real economies are still not. I mean, they haven't been in a good situation for quite some time. COVID exacerbated all the underlying problems, but the market doesn't care. It just doesn't care, and you only need to care about what the market cares about. Otherwise, you'll end up losing money trying to prove yourself right. So also a very decent day so far today for many assets, including the metals. Look at crude oil, 5% higher. I'm going to go to crude afterwards. Look at gold, finally breaking through the recent consolidation. We had 4 consecutive days of a very tight consolidation, 3 of which were dojis, right? So textbook consolidation candlesticks. We had like a spinning top on 3 dojis during the past 4 trading days. And we finally seem to be breaking higher because it makes sense. Once you're consolidating the previous move, which was higher, and you can't really pull back, then inevitably you're going to push higher. The thing is that we now find ourselves exactly on top of this confluence of resistances. I wrote about it in the end of week analysis, right? This is the confluence of this descending channel you see here in red, and the 50% fib from this high to that low, to the spike low that we had that Sunday night. And if you notice, just a few dollars higher, currently at 1810, 1811 almost, we have the 200 daily moving average. So a nice accumulation of resistance areas, all within less than $10, right? Between 1802 and 1811, let's say. So within these $9, we find all these resistances. Bottom line, I think this is a very important pivot area, at least in the short to medium term. We break through this 1810. Let's say if you want to be, a little bit more to the safe side, you leave some space to 1810. We break through the 1810 area. I think we're headed higher. Now, silver has had a much bigger move than gold today, but you need to keep in mind that silver was also underperforming for a period of time. What remains most important than anything else, though, having to do with silver, is the fact that silver held once again these symmetrical triangles you see here in green, trendline support. So we're still holding that. And we can even talk about a potential double bottom if you ignore the spike low, because it was literally a weird market move that we had that Sunday night. So if you ignore that, you can even talk about the possibility of a double top if we break through $24, right? So above $24, we open more upside for silver. Above 1810, we decisively open more upside for gold. Now, the big mover of the day is crude oil. And why is this important, besides the obvious that whenever you have like a big move, it's always of importance, right? We always monitor big moves because very frequently they prove to be significant, having to do with creating bottoms or tops, or accelerating an existing trend and putting it in a different gear, in essence, right? Sometimes a big day, a big mover might be the phase at which the market decides to move from, let's say, second gear to like fifth gear, right? So not changing direction, but changing characteristics of the move you had so far. Now, in this case, the importance of that was that we see this big rebound from this channel trendline support. And I wrote this on the weekend analysis as well, that we're testing, we're probing this descending channel trendline support. And, this is a very important area because it is the place where crude has to take a decision of if it wants to start a much bigger corrective move to the downside, or it wants to finish correcting lower there and perhaps resume to the upside. And I have to say that it's extremely early. It's just been a few hours of trading, but so far this is a very formidable reaction, one that I wouldn't ignore, right? Currently testing also previous lows there at $65.30. So huge move for crude oil and from a key support area. So in my opinion, you should not disregard this as, pointless volatility. Perhaps it's not that. Natural gas, not as a big mover as crude oil for sure, but what remains the case is that it kept holding, and it's now pulling away from the 380 support area. I had mentioned the importance of this area multiple times, that this is the first area of support, and as long as we trade above it, there is absolutely no reason why somebody would or should be short natural gas. A big move also coming from Palladium, right? Closed on Friday a little bit below this descending channel trendline support, but as it seems for the time being, that was a false breakdown, and we're now rebounding with force. Now, keep in mind that 2500 is a very important resistance area. So in my opinion, what happens from 2500 is going to tell us if Palladium is about to unfold a much bigger move to the downside, or perhaps we've also seen the end of a corrective move here in Palladium as well. If I had to choose between Palladium and crude oil, I would be more optimistic in the case of crude oil, about the potential of more upside. Now, copper also having a second consecutive very good day, starting from the 200 daily moving average, because that is the level which the market decided to respect. We had on Thursday this move slicing through the 200 DMA like hot knife through the butter, but by the end of the day we had retraced more than half of the losses, and we actually closed the day exactly on the 200 DMA. We opened on Thursday, we opened on Friday exactly at that level. We just pulled away, and we're seeing a nice resumption higher from there. We're now back testing this trend line support as resistance. So, short term, I think this is an important level for the market. We get rejected from there. There is a potential for more upside, for more downside. We slice through that. There is a big chance that we've already seen the end of this corrective move, and we might be about to begin the next bullish move to the upside. It's extremely likely. By the way, new hotel, different internet. I actually had to travel to bring another router, so I have better internet. How has my connection been so far? Is everything okay? Any lags, problems? Okay, good. Okay, I'm happy because I literally went into a lot of trouble to make sure I'll have good internet here. Okay, so perfect. Okay, that's good to hear. So yeah, that's what all I had to say about copper, which you know how important the copper market is. I mean, frequently front running developments in other instruments as well. If we want to talk about effects, you know very well it's generally good correlation with the Aussie, for example, right? So that's what I had to say about this. Now, let me see, there were some questions. Nasdaq just hit all-time high by a few pips. Yeah. It was inevitable. I mean, it was almost there. So Michael says, great hack tip with the camera. It's a thing Asus has. It's called, it's this one. Let me show you. So it's a thing that Asus does. It's good. Laptops don't have an embedded camera because the bezel of the screen is very, very small. So they give you the ability to do a lot of things with your phone, including, you see, this. You can share files, etc. But you can also connect a device to use as a camera, which is very convenient because it's connected via Bluetooth, which means afterwards that you can through Wi-Fi, through the same Wi-Fi. So it gives you the ability to be very portable with your camera as well. Although I do have an extra camera here. In any case, it's really good. Nasdaq, yes, we talked about Nasdaq. Nasdaq is about to break through that 15,200, and the next upside target is at 15,600. Now, our friend Amira is asking about Bitcoin. Bitcoin is breaking through its recent consolidation. It's now very, very close to the 61.8% FIB from the all-time high to the low we had at 28,600. 51,000 is the level where we find the 61.8%. I think it's somewhat overdone in the short term, so I would definitely not be chasing that. You can also notice the very obvious RSI divergence, right? There it is. So I wouldn't be chasing it up here. What you can do, though, is wait for a deeper corrective move towards 42.5 and try your luck there. Ethereum, somewhat equivalent, creating here a symmetrical triangle. So what it might likely happen from there is, let me change this line a little bit, is something like this, right? This is a bullish case scenario. Something like this. Dry to come up, do the same for Android. Okay, that's very interesting to know. That's very interesting to know. Now, CAD yen. So we have a question about CAD yen. Let's have a look at it. I had a look at it the day before yesterday, if I remember, and for the weekend analysis, and I specifically wrote about it. And instead of trying to remember exactly how I worded it, we can just look at it together. This is how I worded it. The CAD yen rebounded from the 85.20 area of support, right? Which is the exact horizontal area I was showing you. Here it is, this support area, right? After breaking through it intraday, because we did break through it intraday, but I've told you again and again before that I pay more attention to what happens at the close of the day than anything else. A close below it will open the door for a bigger move, with 83.20 being the next downside target. Alternatively, now let's go back to the real charts. Alternatively, we can push back towards this flat bottom triangle trend line resistance, currently passing roughly from 88.5, which is where we found the previous high as well. Now we have a soft resistance area rather close, 86.70, let's call it. So, bottom line, if we're talking like shorter term, look for that resistance. If we want to talk a little bit more then a few hours into the day, I tell you that as long as we trade between 85.20 and 88.50, okay, I think there is not much you can do. Not much you can do. Let me rephrase that. Depends on how you want to be entering trades. You could be long against that level, right? You can jump the gun and say that, listen, I've had a prolonged move higher. I've had a move lower that looks somewhat corrective. We seem to be building a nice reversal formation. So I want to be, I want to jump a little bit the gun to get myself. I know I'm taking a little bit more of a risk, but I want to have myself a little bit better of a risk reward ratio. So I want to be long here, assuming that we're going to be pushing higher and eventually breaking through 88.40, 88.50, and then on our way to new highs. And I want to be in this trade from as soon as I can. So if that's the case, you can wait for the close of the day. And if we close the day rather positively as we are now, and we leave behind this morning star formation, you can then be long against the lows, right? And ride this and, wherever it gets you. Also, you can notice here that you have some RSI divergence also likely pointing higher, right? So there you go. That's what I think about the CAD yen. Question about the Nikkei. My pleasure, Carl. Question about the Nikkei. So let's have a look at the Nikkei. I've had a look at it rather recently, if I remember right. I think it was Thursday, something like that. Thursday, Friday, something like that. So here's the Nikkei, and what I see in the Nikkei is probably what you see as well when I zoom out. So what do you see in the Nikkei? A clearly impulsive move higher. And in my opinion, if you're asking me, a clearly corrective move lower. That's what I see in the Nikkei. Clearly impulsive move, clearly corrective move. Just look at how obviously different the characteristics of the two moves are, right? So have we found a low in this corrective move? Impossible to say, right? Because we just recently produced a lower low. But are we in an overall bullish trend in some type of a corrective move within it? Most likely, yes, right? So although it's impossible to say if we found the low yet, it's extremely early to say so. I'll tell you that I'm rather confident that we are within a corrective move lower, and being bullish, this market is the right direction that you should be looking towards. Now, if we're not done correcting lower, the next area of interest to the downside is at 26,250. Right, we might take more time unfolding this corrective move lower, but I think that sooner rather than later, this is going to produce something like that. Okay, that's what I think. So I keep looking at it. I'm not going to lie to you. It's not one of the charts that I'm looking like several times per day, but 2-3 times per week, at least, I do look at this. Okay. Let me see. I guess it depends on yields also. Depends on yields. Not necessarily. Yields can play a role. Now we're not talking about USD yen, we're talking about the Nikkei. Although, of course, you can make the case that USD yen does affect somewhat the Nikkei, right? It does, that's true. But it's not the only factor that affects it. It's not impossible to see the Nikkei doing something different than USD yen. Yes, it's not going to be for a long period of time, but it's not impossible for something like that to happen. In isolation, in any case, it looks like it's doing what I just told you. It's correcting lower in a clearly corrective pattern. So I would be medium to comfortably booked here. And even if we want to talk its correlation with yields, right? Even if we want to talk, for example, 10-year yields that affect USD yen quite a lot, I'm still of the opinion that the next big move for yields is to the upside and not to the downside. That's what I think. We don't have solid evidence yet that this corrective move lower in the yields has finished, but I'm pretty confident that the next big move, whenever it happens, is going to be higher and not lower. Okay, that's what I think. My pleasure, Michael. Anything else, guys, gals? Any more questions? Okay, nice. So I guess that's it for today. So I'm gonna wish you a wonderful TC. Let me see. INTC for in. What's exactly that you're asking? Is that a ticker, mate? INTC. Amira. Yeah, I'm not talking about that. Thank you. TC is take care. Thank you, Carl. INTC for in. What? Yes, it is. Int is Intel. Okay. So you want me to have a look at Intel? Oh, sorry. Let's have a look at Intel. Phew, haven't had a look at this chart for quite some time. Still in an overall uptrend, as you can clearly notice. Interesting failure up there. Very interesting failure up there. Range bound for the time being, as you see, within this large range. What is the range? 4280 to 68, let's say roughly. I know it's a very, very large range. Now, within that range, let's see. Welcome back, Blake.
Oh, did I not turn my microphone off? Shoot. Dang, sorry.
No worries. It's not that, something was bothering us. Okay, so within this range, the bullish case scenario is this. That's the bullish case scenario within this range. Right? There you go. Otherwise, lower within this range, 43 and a half, very, very key support. If for some reason we break through that, that's going to be like extremely bearish. But until that happens, I would treat this more as a prolonged bullish consolidation than anything else for Intel. Thank you, Michael. Thank you, Hugo. And we had anything else? No, that's it. Okay, thank you guys and gals. Enjoy the rest of the day. I'm not going to lie to you. I'm going to go swimming. So I hope you have an equivalently pleasant activity to attend to.
Enjoy, buddy.
Bye-bye. Enjoy, bro.
Bye-bye.